Adam Harris here. It is Sunday the 29th of November 2020, and actually looking at commodities now, it looks really eventful. I gotta say, I think that this year I've felt with the recordings I've made that a lot of them have been kind of neither here nor there, and not necessarily non-committal, but the problem is that there's been a lot of range-bound behavior, and it's very difficult for me to convey to newer traders where the potential dangers and potential fruits kind of lie. So in terms of a weekly outset, you have to be kind of very general with that. But it's interesting to me now, I kind of feel like we might be on the verge of some new proper kind of key trends. And it could just be coincidence. It doesn't really have to do anything potentially necessarily with a change in presidency or coronavirus. It could just be that they coincide. So let's have a look at this. I'm starting off with gold. Now, gold has broken through 1800. So if you look at it from a monthly perspective, this is really what needs to be clarified. Gold's kind of key levels come from its previous history of being at these levels, coming back down to test this. So what makes this important is that once gold broke out in 2019 through a level of resistance here, it's very common for, in the financial markets, any instrument to break through a level and come back and retest it from the other side, just for itself psychologically as a beast. It just wants to check that it can get back in or cannot get back in, if whatever the case is, in those situations. And it's unusual for something to break through. Okay, fine, doesn't want to test it there, but then it breaks through the next level, doesn't necessarily, I would not qualify this as a break and a retest. And then it breaks through the next one and doesn't come back and retest it. And then it breaks through 1900 and doesn't come back and retest that, and then goes on and taps 2000, and so on and so forth. So the point being that it just broke through level without at any point, really to my satisfaction, coming back to retest it. That is incredibly unusual. Not to say it never happens. I'm saying that in the small cases where it happens, there is potentially a likelihood that price will do a deeper retracement. So as a minimum, I was looking for price to come back to test 1800. But I have also included 1600 to this previous level here. So if you like to measure Fibonacci retracements, if you measure on a monthly time frame, you will find that these are both very acceptable, including, by the way, 1550 to 1600, that previous level of support, being a very acceptable Fibonacci retracement. If the fact that it's on gold represents a problem for you fundamentally, you can't understand how gold could come back down in value, that's kind of irrelevant from a technical perspective, meaning that you should ask yourself how gold lost value here. That will probably get you closer to an answer, but technically it's perfectly acceptable. So if we do not turn around in this next week, if we produce a nice bullish candle over the coming week, so I'm going to be watching that 4-hour chart, see if we get back over the 1800 level. If we do not produce a bullish candle this coming week, the possibility, if we stay below this, there is a fair and reasonable possibility that the market will continue down to the next key level. If that is the case, and in fact, could there be a midpoint? Yes, there could. The midpoint is, 1700. It's going to be whichever other key levels we can find, but it's going to be midway between the moving averages is perfectly acceptable. You can see here we've pulled back to the midpoint to the moving averages. That could also happen, and that is very acceptable. You could break down to that, finish up as a bullish candle, and then take off. So you can have those, and I'm prepared for those in this area. I'm saying to you that on the lowest point, I pull back down towards 1600, tapping 1550, but actually I'm leaning plan A towards a turnaround in this initial area between 1800 and 1700 and where we are. So, and again, also there could of course be a retracement back up to this level of support to test it for resistance and then carry on down a lot further. That is a valid movement on the daily. So this is one of those situations where we have a weekly downtrend, we have a daily downtrend, we have a monthly uptrend, and where it's really going to turn around now is really what the question is. I'm still bullish in the long run. Even if it comes all the way back down to 1600, 1550, I'm still bullish. It doesn't change anything on that. But I think that's quite a deep retracement. So I'm expecting a shallower retracement somewhere in the coming week where potentially maybe we finish slightly higher than we start, but also, again, possibility for a pullback and a continuation down. So it's going to be kind of tricky because there's a pullback up to this level, the beginning of the new uptrend, or is it just preparing for a further downtrend? And so that is something that I'm going to have to be very cautious of. It means that if I do see some long opportunities, I may be taking profit ahead of these levels, then waiting to see how price reacts at these levels. If price then breaks through, I will then wait for pullbacks and then look for long opportunities to continue on. Silver, again, what I love about this is that silver, for my 2 cents, was really overextended. True value lies closer to 21 and 19, and this is a very nice bearish candle so far. So a continuation down to 21 now looks feasible. That's all really. And that would then mean that I would be looking for longs in this area. So I'm going to keep an eye on that. It's trending on the daily to the downside, no clear trend on the weekly, and a retracement on the monthly. So certainly not as appealing as gold, but that is what I'm looking for in terms of movements down to that level. Copper is beautiful. Copper is now certainly overextended. I can see that its next monthly level is very close by, and it may well attempt to push on to connect that before doing a deeper retracement. And that's it. So really looking for price action in this area, but overall this has been the best performer over the last couple of weeks. Then moving on to platinum. Platinum has broken through recent monthly resistance and potentially pull back. This may well actually be preparing for a move higher. That weekly candle from last week looking nice and bullish. It really just has to make sure it can get free of this current resistance level. And on that monthly chart, it looks really, really nice. It's a really bullish, nice, beautiful candle. So what I'm going to be doing is watching for it to essentially start to climb higher, breaking this previous high. If that's the case, it's feasible in my mind to see it head up towards 1,000. If it fails to do that and continues to break lower, then it just might not have managed to break through this level of resistance at 960. Palladium looks pretty good. I mean, it's a mess on the daily. On the monthly, it's continuing to push higher. Last week, we tended to be a little bit higher. We were pushing up towards these highs. It's still trying to go through, but it's encountering massive, well, I wouldn't say selling at this area. What I would say is not enough buyers. There's just not enough buyers above that 2,500 level. So I'm very, very cautious. But if it can continue to push past that level, I think eventually it's going to pick up enough buyers because it's going to tip the scales, or it'll be a tipping point of sorts. Then moving on to crude oil. So I've been bearish in the longer run, technically, on oil for quite a while. And what I spoke about last week is, and in recent weeks, is if we broke the previous high. So we had started to play out the longer term downtrend. We appear to have reversed. But what is very significant about this is that in a single candle or bullish outside candle, we've broken the previous highs. And what that really does in terms of price action is that shifts us into a monthly uptrend. We go from a low to a high to a high low to a high high. And that's very... I think that that's significant enough to be taken seriously. In what that really means is that for now, I have scrapped my longer term opinion of oil. The only way for that to come back on the table is should we close literally in the next couple of days all the way down, which means oil would have to fall through the floor, and I think that's unlikely to happen. It doesn't mean that oil can't range. Oil could range for the time being or for a while, but it does mean that I'm not as bearish as I was before, and therefore those longer opportunities to the upside are a valid upset now. And I also think that testing levels, previous levels and highs, we broke through those. There are the potential. There is very valid potential here to continue to trend to the upside. So on all of my oils, Brent Crude, West Texas, and so on and so forth, I'm going to be looking for potential decent pullbacks, testing levels of support, looking to go long. That's my plan A. And plan B is then the idea that it would potentially collapse dramatically over the next couple of days, which is not impossible, but just the least likely option here. Pullbacks into previous levels of support could be some really good, especially, for example, this area of resistance, potentially good buying opportunities. We do already have a bullish candle on previous resistance. So that implying just around monthly resistance, implying it could attempt to continue on from here. But I have a feeling that it might be a little bit tired, might need to do a bit of a pullback. But having said that, I'm now positioning myself for long opportunities on oil. Right, Bitcoin. So Bitcoin almost got to 20,000. I think it's going to take another run at that. So this is what I'm going to be looking for this week. So plan A is to look for price to head up towards 20,000 to tap it. I'll be monitoring the MACD and the RSI to see if we get bearish divergence. So should I get a fresh high, taps that very strong rejection bar, but very strong bearish divergence, don't get any fresh highs in the moving averages here. That may well present a decent shorting opportunity if price is now going to start to head lower from this point. It is overextended on the weekly. It is definitely overextended on the monthly. And once it hits that, it'll be overextended on the daily. Therefore, bearish daily potentials, reversal signals could be the beginning of a deeper retracement back down towards 15,000, 13,000 and 12,000. Those are areas that I'm eyeing out in the longer term. Medium term this week, as I said, I really want to see it succeed in tapping 20,000 before doing a deeper retracement. As I said, back down towards 13,000 would be great. 15,000 even would be acceptable to me. Just something where we can let off some of that buying pressure. But so far, loving the look of it, and still much longer term of the opinion that cryptos are going to continue to increase in value. I also note, and it's interesting to me, PayPal have got their eye on Bitcoin, but I'm amazed that they didn't have it their eye on Bitcoin 5 years ago. So anyway, that's a different story, I guess. So again, Ethereum pulling back, bullish moves to the upside. Why not take another run at 600 and then potentially produce a lower high and then do a deeper pullback? This is not as overextended, and actually any pullbacks here would be very small. Relatively speaking, Ethereum's growth has not been as aggressive. That's not a bad thing. It means that it's not overexposed, it's not in a bubble, it's more stable, relatively speaking. Ethereum, to me, a combination of Bitcoin and Ethereum are absolutely fantastic in terms of that. I really like the look of this, and it's just not in the bubble that it was previously. So in other words, it seems to me that Ethereum's growth here is much more in line with true value than Bitcoin's, and Bitcoin is still a more popular brand, so to speak. So it's possible that it's piling on in terms of demand rather than true value. And that's it. Wrapping up. So continuing to expect bullishness. There are some retracements due on this. Looking at oils to sum up. Prepared to look for longs for intraday and end of day trading on oils now, leaning that way for plan A. Looking at some of the metals, copper looks really good. Gold and silver, expecting those to see potentially, if they then they either turn where they are now, potentially start to head lower by the end of the week, and their journey isn't essentially might not be finished just yet, especially not silver. Silver has that potential to go a lot further. That's it. Thank you very much, ladies and gents.